Welcome to TradeTheNBA.com. This is John's reports for the 18th of July. And we had a little bit of excitement yesterday. Not a whole lot. It was pretty much positive extreme fill that we were looking for. Not so much on the S&P, which just returned to the ABM yellow, which we were talking about the other day. Still has a little bit more to go to fill in these positive extremes. The NASDAQ, however, did fill uh, all the way back down its positive extremes. If we take a look here, so we have positive extreme from right here, and that's what we're looking at right there. And Bill came right to it. So out of range, no. Is it a coincidence that Biden in a interview says that if he has an illness, he would drop out, and then the next day it's reported he has COVID? Of course, maybe the market reacted to that. They had also suspended when they were going to start voting for the Democratic nominees. So behind the scenes, they had already decided on the coup, and now the question is, who do you replace him with? I mean, obviously, that's going to be a lot of infighting. Nobody voted for whoever it is, and the market doesn't like when the veil is, stripped away and people realize that you're not actually voting for the person that they select. So that's a whole different story. We're not going to get into those kinds of conspiracy talk, but it's just an interesting one because that was the whole point of primaries, was supposedly people deciding who the candidates were. But that's not going to happen in this case. It's going to be a selection. From Treasury standpoint, of course, we're going to be reaching, near zero rates as the TLT here representation of treasuries showing that the yield continuing to decline, even though real rates have not changed at all, despite the Fed talk. And that just means there's no reason to be putting your money into treasuries whatsoever, because you're just going to get hammered. Of course, if the Fed miraculously drops, 50, 100 basis points, then maybe it's worthwhile. But is that really going to happen? Probably not. From an oil standpoint, again, disaster. This is not going to make any justification for cutting rates, because you're going to see a future CPI continuing to rise, at least for core household items. Maybe not necessarily what they're looking at, because real estate has been in a bit of a difficult bind. So rents have declined, which has helped them justify their reduction in interest, inflation. From a euro standpoint, of course, it's all roses for euro, even though they're paying more for oil and that and having to convert it. They've convinced everyone that because rates in the U.S. are going to be going to zero, that the euro is definitely the place to be. Yeah, even though they're now currently wanting to boycott the EU president because it's from Hungary, and he's out there running around demanding peace for the Ukraine situation, and that's not what they're looking for. So they want to ostracize him for that one. And as we continue to suggest, gold is not going to stop. I think that they realize that it's pretty unhinged as far as where the currency situation and economic modeling is just a little off base, because there's no reason why gold, oil, these things would be at these levels, but for the fact that there's a disruption in what real value is, and people not wanting to be in the dollar, of course, being into the market's already taken into account that devaluation. That's why it continues to rise, and you can expect that it's going to continue to do the same. Yes, there's going to be fits and spurts of, filling positive extremes, but that's hardly dramatic. And you can see still positive aspect for crypto, even though, Bitcoin facing its issues with all that extra supply and everything, still holding on quite well, and has matured. Same with ETH through the years now. And so it's no longer what you might call a super speculative bubble. Is just your regular commodity type trading thing. So here I had marked we talked about it the other day. This was the positive extreme that we were still looking to be filled even when we saw the initial uh, step down, and market came in, politely filled it, went a little bit further and stabilized right around it. So yeah, not dramatic, despite some of the headlines describing it. It was kind of a sporadic move. It happened in the European session for the most part. Then they popped it back up right before the open, only as soon as the open took place to fill it all back in. And then it was just kind of spotty back up and down. And of course, here in post market, they've brought it back up again. Just so nice, very convenient, but it certainly does wonders for whipsawing option trade back and forth, and that's kind of what they need to do. We were up almost 20 some just a few moments ago, and this selling has taken place. I think the realization that there could be a change on the lead of the Democratic Party is going to have a big impact because no one knows what kind of chaos that's going to bring, and markets don't like chaos. They need a defined situation. They know exactly what they're getting. Obama 3.0 with Biden. If he runs again and not knowing who they're going to fill in, yeah, that creates some emotional distress, and people would more likely be again, this gets back into the uncertainty principle here. When there's uncertainty, people usually want to be in cash and or just hold and not do anything, and that has a definite economic impact. We see that as it relates to elections now, where people don't travel, do things just because they're waiting to see what happens. And then afterwards, life goes back to normal and you resume. So we'll continue to play it as it comes and just follow the readings. As always, though, trade well. We'll have a good one. Anything relevant, I'll put on the Skype chat. Have a good one.